We'll cross to global economist Ken Curtis for the implications of Obama's stunning win. But first, there's a credit crunch for many businesses. Small and medium firms in particular are feeling the pinch, with some unable to get loans despite having healthy forward orders. The squeeze on business funding could have implications for the federal budget as well, and potentially put the brakes on a recovery in business investment. Neil Woolridge reports.
Bank bashing has been a national pastime for decades, from politicians to retail customers. And now business customers are feeling unloved as well, as their lenders play it ultra safe.
You know, they've been 12, 15 odd years with the one bank. They've always tried to tell them everything that was going on. And then the bank comes along and reprices or makes things much more difficult for them. That's probably where that disappointment and confusion does come in for them.
Paul Dubois says the small and medium firms he advises are finding it increasingly difficult to access funding.
We've got an example of a client who's got $7 million of forward orders and need sub $1 million in debt funding to actually help them finalise those orders, and the banks are just walking away from it and not helping them.
Bank lending to business grew at just 4% last financial year, and in a trading update to the market, the Commonwealth Bank expects subdued growth will continue. In part, that's a hangover from the 14 years up to 2008, where business lending grew at almost twice the rate of GDP growth.
It's harder for banks themselves to actually borrow money, so they've got less to lend. The other thing that we've got is funding costs for banks are sharply higher than they used to be.
What has really sort of stepped in to replace those volumes has been mainly the US dollar bond market, also other offshore bond markets with US Treasuries at record lows. The opportunities to fund at very low cost in those markets has never been better.
While lending growth remains subdued, corporate bonds are taking off, with the value of bonds on issue rising nearly 25% in 2 years. Last month, BHP Billiton issued its first Australian dollar bond in 11 years for $1 billion, while Telstra is also looking to raise around $500 million. Citi's John McLean says corporate Australia is now looking increasingly to alternative sources of funding like bonds or hybrid securities, a mix of debt and equity.
The hybrid market has been accessed in record volumes this year. Investors are looking for yield. They're looking for safe yield from rated entities, and hybrids are a security that have proven to be quite popular.
The continuing squeeze on corporate lending may have implications for Australia's economic growth and the federal budget as well. A survey released by Dun & Bradstreet shows capital investment expectations for the March quarter have hit a 9-year high of 20 points, well above the long-term average of 6.
It's too early to tell whether the companies that are looking to boost their investment over the next year or so are going to be using retained earnings, or they'll have to go to markets to borrow that funds.
Stephen Koukoulas says the government will need to see economic growth of at least 3% to achieve its budget surplus. But the question now is whether banks will come to the party and help the nascent revival in business investment reach its potential.